All right, so today we're going to cover the strategies and our dashboards, how we trade, why we trade it, how they work. I'll go into a little bit of detail here, and I'll try to explain, logically why we do the way, why we trade the way we do, and how you can, use these as well. All right, so first of all, I have been covering it a couple of times in a couple of videos, but we've been, way back when we did our first strategies, we were just, developing and, trading, and we tried to get our strategies into code, right? Because the issue was, it's always the same thing, right? If a human being is required in order to, execute on something that should be done instantly and consistently the same way, then that person is essentially going to, eventually at some point, going to create issues. Number one. And number two is, if you get to a point where you want to trade a lot, right? So, a lot of things at the same time, which I will get into why, then that is not really doable with the person, right? It's very, very mentally taxing to be trading because, of everything that we covered before, right? There's little emotional triggers designed to trigger you, so and you fighting against it constantly, right? And no person is perfect, so there will always be situations. And same thing with bots. They're not perfect, but in both ways, right? Whatever direction you do in trading, what is important is to have a consistent plan, and as long as you stick to that consistent plan and you most of the time and you manage your risk all the time, then you'll be off just fine, right? So we were trying to create strategies for multiple investors so they would invest money in the hedge fund. And to get to those strategies, we had, we were struggling because we weren't struggling to make profits. Look at this, it's beautiful. We're this life since I don't know how long. We weren't struggling to make profits, but we were struggling to be consistent, right? And this is what most traders do. If you just look at, whoever's watching this right now, if you look at your P&L, looking back, and by some miracle, if you're profitable, right, then it's probably going to be very volatile. And even then, that's not good enough, because not real traders, but people that make money in the market, they look at consistency and not at profitability, because anyone can have a huge profit trade, but that does not mean that they can predict how much money they're going to make in the market. Those are two completely different stories, right? And what does an investor do? And that is the exact same way we need to think, right? With our own money, with our own trading, like investors, right? Because that's literally what you are. You're investing, just on different time frames, scales. So what does an investor want? An investor wants a way where he can multiply his money in the most consistent way possible, right? Physically possible, without him having to worrying about risking his money and getting good returns off of the money that he's using, right? That's essentially what an investor wants. That's what we want, right? We want to trade, right? So we want to, invest our money, whatever we trade with, and we want to multiply that money, and we want, to have some kind of reassurance that when we make money in the market, we will do it consistently, right? So that was our goal, right? And then getting there, we just started overcomplicating things, and that's how we tried to get there. And that is that's the path of least resistance if you don't have the required knowledge. So that's what you're going to do, right? You're just going to do a lot of stuff, and you're going to try to do a lot of things, and you're going to overcomplicate things. And, while, if I take this chunk of data, then I will find a strategy that is absolutely perfect for this chunk of data, right? But if you apply it to another chunk or to real trading, then, it's not really going to work, right? And that happens if you overcomplicate. So we were struggling with that. And then one day we're like, okay, well, fuck, like, what do we do? So we sat down and looked through every single trade in our strategy, in our backtest, which was hundreds of trades, every single one, the same way we backtested, on our previous call. Whoever didn't see that, watch that. I think it was a great video. And we backtested it, and we learned so much about our strategies where, the following week we had strategies that were working well already, right? And this was, for example, let me share my screen real quick in the Discord. This was, for example, I've shown these reports a couple times already, right? But these are one of our reports, right, with our strategies in there, right? So we have the turtle that's, pretty profitable. Then we have our stock BTC, which is doing pretty well as well. ETH bullies, and these ones are actually more profitable than they were because we improved them quite a bit. And then we have our, our other strategies. And all of these strategies, right, they do different things, right? They're on different coins, and they're based with other stuff, right? But, all of them are created because we backtested them and we learned what is important and how they work, right? And then what we did was we aligned them, or we compared them to the performance of the coin itself, right? Stuff like that. But, you see all of these strategies and all these equity curves, right? And then we combine them together into the overall equity curve. And you see, there's ups and downs, even if they're not big, but there's ups and downs, and this is higher volatility. But our overall consistency is like this, right? It's essentially a straight line, which is very, very good, right? Which is very, very good. Our max running drawdown is 24%. So that means that you can easily run this with leverage. And if you run this with leverage, say you run this with, 5x, right? Or say 3x, right? What would that mean? Would that mean 3x the result? No, because it means that you're compounding, trade over trade over trade. So those results will be much, much bigger, right? So that's something that's very important to grasp, right? So whenever we have a strategy, the strategy that we've backtested, on the other call, I like that strategy. It was pretty good. I never traded it myself, but I kind of just randomly, looked at it or set it up a couple calls ago. And then we backtested it, and it looked pretty good, So whenever we have a strategy like this, the next step would be, okay, we're just going to look at those. We're just going to look at that strategy, and you're going to look at, 100 trades, 200 trades, and actually understand it, improve it, do it again, improve it, do it again, and then we would have a strategy that we could probably use in our dashboards, right? So how do these dashboards work? Right? So first of all, you have a lot of strategies here. Why do you have a lot of strategies here that are trading the same way, or not the same way, but they're trading at the same time, different ways, is because, when you have a strategy and we have a bunch of them, right? Because what do we want, right? We want the highest predictability in the market. We want to say, okay, next month, in 2 months, in 1 year, this is a range of money that we will have in profit out of the market with a very, very high probability. How do we do that? Well, we have our strategies, right? And they all have projected returns. How do you make sure that those projected returns have a higher likelihood of happening? An example. I used this already, but I'll do it again. Let's say you have a coin, right? And you're flipping a coin. What's the chance that you're gonna, you flip it once? What's the chance that it's gonna be heads? It's 50%, right? So you have a 50% chance of flipping a coin. However, if you flip the coin 5 times, or if you flip the coin 10 times, right? It's probably not going to be 5 times heads, 5 times tails, right? It might be 7 times heads, it might be 8 times heads, it might be 2 times heads, right? There is some variance, right? Even though we know the statistical probability is 50%, but because we only, did it 10 times, there's a lot of variance, right? However, if you flip a coin 1,000,000 times, then you will get pretty close to that 50%. And this is kind of the same situation. So we have our strategies, right? Those are like our horses, basically. And as we have them, and we did our work, we did all of that, now we just want as many horses in the race as possible. And when we have that, then we can expect our equity curve to look the same way all the time, because we're flipping the coin so many times, right? We know that the probability is skewed in our favor. So now the job is to flip the coin as many times as possible to make sure that we get, consistent returns, right? This huge spike here is because the altcoins were going up a lot, and it traded Solana, Phantom, Doge. So that's why you have this huge spike here. Scaled, actually, this is interesting. It's kind of very similar to this, right? Which happened in December 22. Very, very similar thing here. So, you can expect, it's kind of going in cycles, and then also a very similar thing in here, right? So just cyclic behavior, which is something that you want. So that's the base theory behind them, right? So how does this work now? Now I will go a little bit more into detail, and that'll be a little more technical, right? So we always, when we look at strategies, when we're trading, right, that was literally day 2 of our challenge course, right? Is, okay, well, how do we trade? How do we have a strategy? Well, first of all, we understand the theory, right? We just covered that. We just do a shit ton of trades. Now, what is the second thing? Well, after understanding the strategy, we need to know, or we need to, understand, we need to get confirmations, right? We need to get confirmations from other time frames, right? So when we trade the 15-minute, right, it makes sense to look at confirmations as in indicators, right? Multiple indicators, do they say the same thing? And then we can go into multiple time frames. Do they say the same thing, right? Are they aligned? Are they all topped up? Are they all going down, right? Things like that. So that is something that we wanted to code, right? And use. And going through it like this, in live trading, especially when trading more coins and more strategies, it's close to impossible to memorize all of that, right? So we try to, find a more, easy way or consistent way of doing that. So, what we did is we just, took all the data from the time frames, put them into one sheet, right? And just worked with that sheet. However, then we realized, by losing money, we realized that the data that TradingView actually gives you, or any platform actually gives you, is skewed. It is actually wrong. Because, let me give you an example. So let me do the replay function and go here, right? At a random point, I will go to the 3 hour and look at this time frame, right? So I'm looking at 3 hour, and the last candle here is Monday 13th at 9 o'clock. That's the last candle I have here. And the last candle I have here, actually let me go one candle ahead so it's going to be easy to understand. And if I go to 4 hour, then I have a 12 o'clock candle, and here I have a 12 o'clock candle as well, right? That sounds pretty reasonable. However, this is a 3-hour candle, meaning that this candle ends at 3 p.m., right? This, on a 4-hour time frame, this candle ends at 4 p.m. What does that mean? That means that when I look at this time frame, I see, data up until 3 p.m. When I look at this time frame, I see data up until 4 p.m. When I look at this time frame, I see data up until 6 p.m. Right? So when I trade the 3-hour time frame and I look at the 4 and 6-hour time frame, I get data that I wouldn't have when I'm live trading. So when I'm replaying or backtesting, I'm actually getting data that I wouldn't have at that time, right? Let me prove this to you here. Let me go to 12 o'clock, the previous day. So here at the 3-hour, we had, the current price at, 3 p.m. Go on ahead. At 3 p.m. is 37,236, right? That's the price at 3 p.m. If I go to the 4-hour, see, the price went back down. So if I have this data and I'm trading the 3-hour and I'm switching the 4-hour and I see the stochastic is going down already, I wouldn't have seen this. I wouldn't have seen this at 3 p.m. I would only see it at 4 p.m. because there's a 1-hour time difference here, and here it's still up and here it's already down. And when I go to the 6-hour, then I get completely different data again, and I'm forward looking. So if you look at all the time frames in a sheet together, you get wrong data. Your back tests look good, but you cannot transition that into live trading. And this is another reason. So you're a retail trader, right? You get the basic information, you learn it, you're like, oh, okay, well, I can't just randomly do stuff that doesn't work. I'm going to lose money, so I'm just going to make a strategy, and then I'm going to work with that strategy. You put in the work, right? You backtest your strategy, and it looks great after a long time of working on it, right? And it works great, right? What you don't know though is that you've been looking at the wrong data. You've been cheating without you knowing. So then when you're live trading, the strategy is not going to look good, right? So then when you're live trading, right, and you think you're already an institutional trader because you have a strategy, you have a plan, and you're live trading, and it's not going well, then you're like, okay, well, that just has to be a part of the strategy because I've been backtesting it so much and it's been going so well. But you've been backtesting it with the wrong data. You've been backtesting it with knowing what's already going to happen, and you don't have that in live trading. It's not going to work. So where you think that you already escaped the retail trader sheep mindset, right? Well, now you're just a more sophisticated retail trader, right? You're doing the same thing because you're still being, screwed over, essentially. So that's a very, very, very important thing that most people don't understand, is that, even if you backtest, you get fed the wrong data, so your strategy looks better than it actually is, and all that does is just gives you a confirmation into going into trades again and losing money again the same way normal retail traders do. Right? So how would we fix this problem? Well, it was a problem for a long time, but what we needed to do is to simulate live trading, not backtesting with the replay function. It was to simulate live trading. So how did we do that? We took granular data, like 1-minute data, and then we just ran a simulation, tick after tick after tick, right? Candle after candle after candle. And whenever the times would be setting for each candle, for each time frame, we would just create those candles ourselves. But as we were creating those candles ourselves, we still had the data that was going on within the candle. And what the result of that was a big sheet, a sheet with 280 columns, 278 columns, for every single minute in the market on every single coin that we were trading, and every single minute the entire 278 columns were processed again and again and again with the real data as it would when live trading. That's what we did, and we took that, and that's what, a couple days ago when I said, the strategies aren't ready yet because I'm pre-processing. That's literally what I've been doing. Like, my laptop was burning up for days, and servers, by the way, too, because we had to pre-process all the data for you guys, put it on a server, and I was just live adding in the data as it goes. But that's our base, and that's how we're trading the strategy. So whenever there's any, live data or historical data in a strategy, you know that the, entries, exits, times, behavior in those strategies are going to be exactly the same as they would be when you're live trading. And that's very, very important to have this statistical relevance when you do any sort of backtesting or live trading, right? So that was part one. That was how we got to those strategies in the first place, right? So what we did was, first of all, we're trading a lot of strategies, right? So like bundle 4, for example, it has like 9 strategies. They're negatively correlated. So we made strategies. They're trading off of our own pre-processed data, which is not available somewhere else. We're just literally pre-processing it ourselves. Those strategies are trading on there, so we know that backtesting or live trading, it doesn't matter, it's the same exact thing. And they can all trade together again, right? And we can also make decisions off of larger time frames within the candles and have exact data of the stochastics and the values and all other indicators that we use within the candles, intra-candle data, right? So we essentially have way more perspectives as someone else would, because they just don't know what happened within these candles. You don't know. But if you pre-process the data yourself in granular data, then you have that information, right? Which is, in a 2 hour, that's 120 more data points in a 2 hour time frame, 240 more data points in a 4 hour time frame than someone else, right? So it's a big deal. So we had those strategies, right? And every single strategy is trading like this. Now we analyze the strategies once again and understood how they behave when they work and when they don't work. And we put them together, right? And we mapped out all our strategies and put them on one chart essentially. And saw, which ones work well in what conditions and which ones don't work well in what conditions. And then we paired them up so they were opposite of each other. Meaning that whatever market condition there is, right, in these bundles, there's at least one strategy that works well. Or at least, when there's 9 strategies, there's multiple strategies that work well. Meaning that no matter what, if you're in a bear market, in a bull market, in a low volatility market, high volatility market, high liquidity, low liquidity, it doesn't matter. There's always some strategies that are profiting off of that, right? So when we talked about negatively correlated strategies, right, you have a trend reversal strategy that's trading a range. You have a trend following strategy that's trading breakouts of the range. The trend reversal strategy works when we reverse the trend within the range and doesn't work when we break out. The trend following strategy works when we break out but doesn't work when we reverse in a range, right? They're literally opposite of each other. But both of them, isolated are profitable. So when we put it together, they're profitable, obviously, but also our account does not move that much. It moves much less, and if it moves much less, we can put in more leverage, which will give us, exponential results. And we don't do that with 2 strategies, we do that with 9 strategies. And we do that 4 times. with different strategies, with different combinations, different alignments, and those bundles together, now that's one strategy, right? So think about how many horses we have in a race, right? And because of that, because there's so many races in so many horses in a race, and so many strategies, so many negatively correlated strategies, it's basically any market behavior, any movement in the market, we profit from. And we profit from it, in a proved basis, because we're trading the exact same way as we would backtest it, and we do it with thousands of more data points than anyone else would, just looking at the charts, right? I'm trying to get this chart to load for you guys. I have the dashboards running locally on my laptop right now, but yeah. So there's a few strategies. Let me go to bully here, and this is the overarching thing. So right, where you have the strategies here per coin, right? You have a bunch of strategies. Well, they're working together, and then you have your bundles that have different strategies, right? And then all of those bundles running. That's the overall strategy that we have, right? So we have, and that strategy overall is looking at the large scale market, and is saying, okay, are we in a bull run? Are we in a bear cycle? Are we high volatility, low volatility? And based on that, it changes the allocations for the bundles and the allocations in the strategies if within the bundles. And that strategy then, trades, just trades our account overall. So we went from the beginning that on the first call that we had, where I said, the way you trade is you take an isolated scenario in the market, right? Because we're not market makers yet. We're not market makers. So what we do is, we can't compete directly with them. And then there's retail traders that, all they do is just lose money and are happy doing that. So what can we do? Well, we can take isolated scenarios in the market. The market makers use, in order to, move the markets or start impulses, whatever they do, and analyze those and, find them and then just trade them, right? Trend reversals, right? Range trading, trend breakouts, moving average crosses, whatever it is, right? And, you understand it, you backtest it, then you add in confirmations that work the same exact way we did that in our backtesting live call. And then the overall strategy, once it works already, you analyze it again and then you fit it together with other strategies. And you put it in a bundle. And then you do a bunch of bundles. And those bunch of bundles trading, now that's what's going to be your overall strategy. So you distribute and then you distribute and then you distribute. And what you can do with this is you can trade the highest probability trades in your strategy, but you will still have plenty of trades to trade, right? And you will not miss anything. Like these trades, like these strategies are just running, right? They're literally just running. I don't even have to look at them. But, while other traders are, just scouring the markets and trying to catch every move. And then when Solana just skyrockets, they're like, oh, did you catch the trade? Did you catch the move? I didn't catch the move. I was looking at Doge, whatever. Like, I'm like, they ask me, did you catch the move? I'm like, I'm pretty sure I did. Like, I didn't even check, but like, it's fine. And then you look at those strategies and, they did catch it. Because you have so many, essentially, agents, right? You have so many workers in the market doing their one specific thing, right? And you manage those workers together so it works, in an aligned basis. That's your job, right? It's like when you're in a company or when you're starting a company or whatever, like there's employees, right? And the job of the employees is to do exactly what they're told, right? Then you have managers that are managing the employees, right? So they're basically checking that if they do whatever they're told, and they give them different tasks. And then there's executives that are managing the managers, and then there's the owner that's managing the executives, right? So basically you just have this tree, this pyramid going on, right? Our strategies themselves are workers, right? And then our bundles are the managers, and then the strategy over the bundles are our executives, right? And we're the owner of the entire fucking thing. So essentially we're building our strategies or building our way of making money consistently in the market the same way you would build a business that has been, that way has been going on for centuries, right? Since the Industrial Revolution. That's how we're building businesses. So, it's a proven concept, right? So essentially you distribute and you get your workers working, and then you're managing those workers. And, as you do that, you will get a very, very predictable and consistent outcome. However, it's important that every single one of those workers has been screened, right? Understood, back-tested, and designed for it to succeed, right? If it has a bad time, if it has a bad day, week, month, even year, right? It's fine, because the manager and the executive will change the allocations, number one. And then number two, other strategies that are, betting or working on the opposite side of the market will make up for it and more, right? And there's so many workers, then it just doesn't matter if one fails. If you trade only one strategy, and by some miracle you designed it the right way and backtested it the right way, if you have a bad month, you're fucked. You're fucked. If you have 3, 4, 5, 6, 7 strategies, well, then those strategies can make up for the bad time in one strategy. And every single strategy will have a bad time in the market. The market has been literally designed to do that, right? By market makers, it doesn't matter what strategy you trade, there's going to be a period in time where it's going to suck. So how do you make sure that you survive that? Well, you have a bunch of other strategies that make money in that time. So you will have no period in the market where no strategies work. There's always something. And your Bitcoin strategies can be doing great. And then it's alt season. So your Phantom, Solana, Doge strategies just start mooning, And then you have ETH, and then you have whatever. Then you have your trend reversal strategies, you have trend following strategies, you have your volatility strategies, right? So there's always an aspect, like what market makers do is they shift the market from one environment to the other environment to the other environment. So, and what most retail traders do, well, all retail traders do, and then people that think that they are institutional traders but are still retail traders, they're just chasing the market, right? So the market changes, they're like, oh shit, I need to change. Then the market changes again, and they're like, oh shit, I need to change. And they're always just playing catch up, right? Whereas, you can just design, you can understand the game, and then you design your own playing field. And then the market can do whatever it wants to do. It doesn't matter, because you've placed workers in all the areas. So whatever area the market goes to, you still have workers there that are working, right? That's the theory behind it. Does that make sense to you guys? That's very, very important. So this is the ground base, the main idea, how our strategies and our dashboards are working. And that's when I say, when I was talking with Alex, who played a big role in building these strategies, he's great at strategies. Like I like to code them and put them into bundles and align them and manage them and get the pre-processing, do all of that. Alex is the one that's great at figuring out the strategies. A great combination of creativity and just pure intelligence. So I was talking to him and I was like, yeah, like these are still the most consistent strategies that I've ever seen in my life. And they're like, yeah, because they're so simple, and that's exactly that. When you understand something, when you understand the strategy, then you don't need to overcomplicate it. You can just keep it simple and it still works. And at the times where it doesn't work, you just logically align it with strategies that do the opposite, and you just have a distributed way of profiting, right? So every single one of you guys, like first of all, you can trade these strategies, right? So you will have all those strategies, or you can have all those strategies if you want them, and then you can just use those, right? But like if you are building your own setup, if your goal is to be independent and be able to make money in the market consistently, right, then the way we start is first of all, yes, we build one strategy and we will literally force you to understand it and to backtest it, right? And then once we have one, guess what? We'll do another one that's negatively correlated. Then we'll do a third one. And when you have 3 strategies, you will have enough horses, at least you will have enough horses in a race where you can, predict the outcome. That's what we want. We want to predict the outcome positively, right? I can predict the outcome for most fucking traders that I see pretty easily. The outcome is 0. Like I just see their volatility, I just see how they trade, and I'm like, good luck. Like, good luck. Like, and I don't need to convince anyone. I'll give them my advice for what it's worth. And, like you'll see soon enough, and they do. Every single fucking time they do, So, like, I'm past the point of trying to convince people to do the right thing where they are really, really, really ambitious to do the wrong thing, and then they do the wrong thing, and after they do the wrong thing, they come back anyways, So, like, sometimes you just let them do the mistake. So this is the core foundation of trading consistently. And as you can see, I'm not even talking about specific strategies, right? But those are just, those are just one of the small gears in the overall machine, right? You want to build that machine. It's the same as in business, right? You don't want to focus on one strategy. You want to focus on the overall vehicle that can consistently generate profits, right? How do you do that? You just do a lot of workers that do different things, right? You want to be the CEO of your trading company, right? You don't want to be the guy that shovels shit, or girl. So that's very important, right? And for us to help, right? Because we do still do manual trading. This is not a talk to tell you to do auto trading all the time. It's to understand how to trade, right? And just put other strategies in your arsenal so you are distributed, right? You don't need to trade 50 strategies at the same time, right? Neither can you as a human being. So the other edge that we have is, like, when we look at the stochastics, right? Like, what you can do is, obviously, you look at lower time frames, and when you look at lower time frames, then you see essentially the stochastics in more detail. Let me give you an example. I'm going to the 4-hour stochastic on Bitcoin. And I see the stochastic, right? And it's going down. It's been going up a bit. Now it's going further down. Now, what I want to see is, okay, can I short here, right? Because the stochastic is above 50. Can I short here, right? RSI is kind of, aligned with the stochastic, which is good. So can I short on the 4-hour time frame? Well, okay, so the stochastic is going down right now, but that's no guarantee that it will keep going down, right? So how can I get a little more insight into the fact if it's going to go down more? Well, I can look at lower time frames. And as I look at lower time frames, I can see where those are going. And as the lower time frames are going into some direction, then those will move the 4-hour time frame, the larger time frame, right? So when I go to the 3-hour, okay, we're having like a small spike up here, which makes sense. So now I have this spike. Okay, is this spike going to continue, right? Is the 3-hour going to turn further? Okay, well, let's see. Let's look at the 2-hour. Okay, well, the 2-hour is actually going down quite a bit, right? It had this small spike, but it's going down further. What about the 1-hour? Okay, so the 1-hour is going further up. So what's going to happen is that this 1-hour, which is, clearly going up, is going to affect the 2-hour, which might have this spike, going back up further, which might help the 3-hour to spike up, which might help the 4-hour to turn further up. Okay, so the 1-hour is going up. Is this going to continue up? Well, let's look at the 90 minutes. Okay, the 90 minutes turning. The 30 minutes. The 30 minutes full up. Okay, so that means that it's going to top out, which means that it's going to go further down, which will affect the 1-hour. So maybe the 1-hour is not going to finish that move. So if the 1-hour is not going to finish that move and is going to turn further down, then the 2-hour is not going to have enough power to turn back up and it's going to go further down. If the 2-hour is going to go further down, then the 3-hour is going to turn down. And when the 3-hour turns down, then 4-hour is definitely going to go down, right? Do you see what I'm doing here? So I go all the way to the 1 minute, right? So we're at the 30 minute, that one's pretty topped out. The 15 minute, okay, that one's topped out already. So this 15 minute is going to turn down, right? Which means that the 30 minute is definitely going to top out, right? Our 5 minutes should be already going down, right? So the 5 minutes already topped out, ready to go down. The 3 minutes is empty. It just doesn't load for some reason. Okay, the 3 minutes already topped out and the 1 minute's probably going to be, all right, going down. So as soon as these smaller time frames, the 1, 3, 5 start going down, the 15 minutes is going to be topped out, going down, and the 30 minutes is going to go into a free fall, which will get the 1 minute, the 1 hour to stop and turn back around, which will have the 2-hour to go further down, which will move the 3-hour further down, which will continue the 4-hour into a downturn. So now I can say, okay, well, now I am way more likely to short here, right? Now I'm way more likely to short here because I took my bias and I looked all the way down into the time frames. And by definition, if the time frame a little bit lower than that is going strongly into one direction, then it will affect the time frame above. And it goes 1, 1, 1, 1, 1. So based on the 1 minute, I can see how the 3 minutes affected. Then I can see how the 5, 15, 30, 90, 1, 2, 3, 4. And you can beautifully see the bias or the change, how it's going to go. And right now they're kind of aligned, but you might have situations where the lower time frames are going up and the higher time frames are going down. So what that means is we're probably still hit the top of a range before going further down. It's a really, really good way of predicting it. And also in the Discord, like many times when people ask me about about my opinion about trade or a range or something, I look at those things and I give a call, and it goes exactly that way, right? This is on recording, right? So we can see how this played out, right? But this is something that it took me a while and a lot of decent amount of brain power to do this, right? And I've done this like a million times already. So for you guys, it's probably going to take like 2 hours to do this thing. Right? So how can we help that? Well, obviously, we already have the pre-processed data, right? So we created this, which is tables that give you the stochastics. And essentially it's this, but in your 30-minute time frame. So now, as I'm looking at the 4-hour, right, I just see the closed, I just see the stochastic at the time of close of every single candle here, right, which is nice, but I'm losing so much data what happened in the candle. Here we have our granular data in 30-minute intervals. So we see on every single time frame from the 30 minutes to the daily here, we see the stochastic where it is, and the color indicates, you know, what it did compared to the previous 30 minutes. So the 4-hour here, for example, this is, by the way, this is not live. This is 2 days ago because the data is not live running on my PC. It's live running on a server that you guys will have access to, obviously. So here you can see, okay, well, it's been going down, down, up, down, down, up, 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 and now it's on at 61, right? Our time frames 3, 4, 6, 8, 12, they're all at 60. The daily's topped out, right? My 1 hour's at 25, you know, slightly going up. It's been all red. Now we see some green here. Also here, more increasing green, and this has just been all green all the time, right? That's our stochastic, right? Here we already have more data than we had here because I can see the 4-hour time frame in 30-minute intervals. So essentially it gives you a snapshot of the stochastic every 30 minutes, rather than here, it gives me a snapshot every 4 hours. So we have a lot more data. We have 8 times more data, right? Which is a big deal, especially when you're trading with bots, right? But also when you're trading it here. So now the interesting part comes, right? So the red and green, right? Those were essentially the difference of the values, right? If the difference is positive, it's green. If the difference is negative, it's red. So now we take the difference by itself and compare the difference of the difference, right? So now we're looking at derivatives, which is math. But you know, the first one is the displacement, right? What's the value? The second one is the velocity, right? So how fast are we going? And that's this, right? How fast are we going here? So here on the 4-hour, right? We've been increasing, right? The values that we've been going by were increasing. And we've been increasing by, you know, certain amount, but then we started increasing more and more. What does that mean? Visually, what that would mean would be that here, for example, here we would be increasing, right? But suddenly we're increasing more and more. So the line is super steep going up. It's the curvature of the line, right? And the beauty of this thing is, this finally loaded, by the way. This is the 4th bundle. And as I said, Solana and FTM, I did not look at a Solana chart in months. But we still caught the trade, right? So, looking at the differences, now we see how the curvature, now we don't just see the values, we see the curvature of those values of the stochastic line, and based on that we can see, and the differences of the curvature, which is the acceleration, and based on that we can see and we can predict where the stochastic is going to go. Because, you know, if it's green now, that does not mean that it's going to be green or that it will keep going up. But if we see that you know, in 30-minute intervals, the values are going more and more up, and it's increasing, it's actually speeding up, the velocity is increasing of that line, then we can predict that the 4-hour is going to top out, because it's already at 60 and we're going faster and faster to the top. So yeah, we're going to go up, and based on this, on the 4-hour, we can predict that it's going to top up. Mind you, again, this is not the same chart as this one, because this is from yesterday or 2 days ago. So don't compare it to this. So now we can see that the 4-hour is going to top out, right? So would we short here on a 4-hour time frame? No, because we know that it will continue going up. And the same thing we can see when something is, going down, as the 90-minute, for example, or if something's topping out, right? So the 8-hour, for example, right? It's been going up, right? Basically the same behavior as the 4-hour. However, in the differences, we can see that the curvature is actually decreasing quite a bit, meaning that we're topping out, right? The curvature is evening out and we're topping out. So when we see this, we're like, okay, we're not going to go further up on an 8-hour. The 4-hour is going to go further up though. So, the 4-hour is going to top out, and then probably we're going to go down, which will turn all of this red, right? And then the 8-hour is going to go down. So if we trade the 8-hour, we will wait for the 4-hour to go all the way up, and then we can go down altogether aligned. The daily is doing us favors because we just topped out on the daily, which is beautiful, and now we have an all red difference, which means that we're starting to decrease down, and we're going to go there fast, which is perfect for shorts. And this was 2 days ago, right? So it's going to be pretty similar to now. And, right now I'm looking at the shorts. I looked at all the stochastics, and, it looks like it's going to go down. If we look at these strategies, they will start, a bunch of them will start going short. So there's that. So that's the stochastic difference. Now we have other indicators here too. The squeeze, for example, which I don't have on here right now, but I don't know if I even showed this to you guys. It's a good indicator. Oh, that's the wrong one, sorry. That's the wrong one. I want the normal squeeze momentum indicator, this one, which is a squeeze momentum indicator, which, honestly, you can look at it the same way as you do for the stochastic. The only difference is that it gives you another dimension, which is not just the level it's at, but also the color it's at. It can be increasing and decreasing right here. That's the only thing. So we just use this as another confirmation, and that's why we have it here. Plus, we have the differences, and this is also beautiful to see because here you can see, the dark and green is compared to here. The same way it's dark and green here, and then we see the differences. So we can see like the 3 and 4 hour, they're like dying, right? Which is a great example. And the 4 hour is dying still, right? In fact, it's already red. So this will also just help us further to go down here, right? Which is good if we're shorting. And then the last one is the super trend, which is essentially just showing you the trend of each time frame. And ideally what we want to see, okay, the 3 and 4 are already red, but what we want to see is like a wave of red going from left to right, right? So this dashboard we're using when we're live trading, and as if you just start using it, you will start getting a lot of data out of it, which will then, give you that, like, not intuition or gut feeling because you have it here, but you will have, you will be able to predict what's going to happen in the market much better, right? Which is because of pre-processed data that, it is actually data that's freely available, but, there's a bunch of servers that just computed it into this form, which we can now use, right? So also, this compared to other people don't. So as other people play catch up, which probably just having one time frame, probably front looking on their time frame too, right? Because they don't understand that that the candles are actually front looking. While someone does that, right? We have these dashboards where someone plays catch up. We can predict the stochastic moves, right? So whereas someone waits for a stochastic to move somewhere, we already know the direction it's gonna move to. So that's a huge advantage, because what does this give you? What's the end result of this? Two things. First of all, you will pick the right direction in the trade, right? Which is a good start, I would say, right? Then the second thing is that, by looking at time frames, all the time frames, you'll be able to catch, or to align to get the right entry. And we discovered how important it is to get the right entry, because that can completely change the environment of your trade, right? So that's important too. So these are the dashboards that we're using. We're using the strategy dashboards just so we can see what we're trading, what we're not trading, what's going on right now. Then we can see the bundle dashboard so we can see the overall profits and performances of that, right? Which is something that we trade. And then we use our trading dashboards that we can use in order to trade live, right? So whenever someone gives me asks me about an opinion of the trade, I just look here and I know where the stochastics are going to go, which means that I know where the price is going to go, and align it over the time frames. And as one time frame affects the other time frame, we know where the price is going to go, right? So that's basically it, right? That's an overall overview of the dashboards. And the basic idea of how we're trading it and why we're trading it, right? So I'm gonna leave you with this. Overall, the dashboards, so first of all, having your strategy and trading your strategy is one thing, but then, doing it the smart way, first of all, understanding the core basics of it, then backtesting it and actually going through the trades, getting it into the muscle memory, and then doing that with multiple strategies that are negatively correlated. And then when you have that, then you can look at the management above that. When I look at here, this might not have it. Yeah, so these are empty. But there's a thing here that's called a profit wallet, which is the overall management here. I could probably find a report or just make a report with the profit wallet turned on. But essentially what this is that we have the strategies, right? And then we have these things, which are, this is literally just the price of ETH, right? So we compare the strategy to the price of ETH, obviously. But then we have an overall strategy above that is looking at the bias of the current markets, and based on the bias it will take the profits from the strategies and reinvest them into spot holdings into each strategy, which is then a profit wallet. So the profit wallet, once that's turned on, you would see that it would just be growing up, because it would only invest those in bull markets, right? Into low risk coins, also distributed together. So you would see this going up, and if your profits, the profits that you already made and took out, if you double that, then you just double the entire performance of your entire work of that year. Double, right? So that's what we do as well. And then within the next year it will help us compound so much more, because we have twice as much money that we can compound with. So that's also an important, and these are all things that we can cover step by step, right? And there are the things like, if you want to do it, like the question is, how do you want to do it, right? Do you want to, trade and just have the dashboards and the strategies and just go one by one with the signals of the strategies, and that's it for you? You don't want to dive deeper into it. You just, you are reliant on the strategies, but they're consistent, and you know that they're consistent, and you can just use them. That's one option. And the second option is, okay, you can come in and be like, I want to, do what you showed me. I want to do that myself, or, at least a version of myself. I have goal XYZ. I want to get to goal XYZ. For example, I want to make $10 million a year, or I want to make, an extra $2,000 a month, whatever it is, right? Okay, we take that goal, and then we're like, okay, well, how do we get to that goal? Make an exact plan, and then hold you accountable to that plan, right? Going from strategy number one, understanding, then strategy number one, then back to the strategy, then making sure that it works, and then just going the entire thing, and have you actually trade the right way. Or be like, hey, I don't need to make a new strategy, just give me your strategy and I'm going to trade it. That's option two, right? So there's basically two options on how to get into that. So and you guys can let me know which option fits you better, and we can then go based off of that. That was that. Next thing is, if you guys think that it's interesting and something that, maybe something new that you haven't heard before, or if there's some knowledge that you think that makes sense, like, bring in more people so we can explain it to more people. And the more people are in the strategies, it will unlock another dimension that I did not even mention. Right? Like, imagine all this work, right? And the results of it, and then 10xing that or 100xing that. That's something that we're able to do when we have more people, right? So do that. And then also, when more people want to use the strategies and more people want to, do it, on a personal basis, you will get a cut from whatever they might pay, which will be, on a snowball basis, a monthly income for you guys. So yeah, that's all I wanted to cover today. I hope that made sense. If you have any questions, I'll be on this call for another 15 seconds, so just write it. Otherwise, just write it in the general chat, and I will answer it there. All right. All right, guys.